This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashir. Thanks for joining us at XM.com. Risk assets took a knock at the start of the week as worries about instability in China and how the country's unyielding zero-COVID policy might further blight the outlook led investors to search for safety. Anti-lockdown protests started spreading after a deadly fire in Xinjiang last Thursday, where residents were reportedly unable to escape the residential complex due to the harsh COVID restrictions. But the protests erupted further over the weekend, turning into nationwide demonstrations against the government's handling of the pandemic as anger boiled over. This is uncharted territory for President Xi Jinping and the Communist Party, and it's making the markets nervous. Traditional safe havens were met with strong demand on Monday. The Japanese yen and Swiss franc led the way in currency markets, followed by the US dollar. US Treasuries also climbed, pushing the 10-year yield to a 7-week low. The yen also rallied against its US counterpart, hitting 3-month highs, while the euro erased its losses and edged higher as European trading got underway. Expectations that the European Central Bank will raise rates by 75 basis points have inched up slightly after the better-than-expected flash PMI readings for November, despite mixed signals from policymakers about the pace of tightening. Crude oil was the biggest casualty of the events unfolding in China, which is weighing on the demand outlook. Investors are worried that authorities will clamp down hard against protesters and tighten restrictions even more amid record-high daily infections. WTI and Brent crude futures were both down about 3%, sliding to near one-year lows. China's benchmark CSI 300 index closed down more than 1% on Monday, and most other Asian markets were also in negative territory. European shares were down too, along with U.S. futures. Wall Street had a mixed day on Friday's shortened session as liquidity was thin due to the Thanksgiving holiday. But markets are expected to get back into full swing this week amid a flurry of data releases out of the United States, as well as another fairly busy week for Fed speakers. Investors will be watching very closely this week's PCE inflation and non-farm payrolls reports for more clues of easing price pressures and a slowing labor market as the December FOMC approaches. This is today's Daily Market Comment. Thanks for joining us at XM.com.